Hello everyone, welcome back. And if you're new, buckle up because what we are going to explore today is quietly one of the most powerful ideas in modern finance. Today, we are going to answer a question which is so obvious that it almost sounds dumb. Why does the world buy oil in dollars? Not yen, not euros, not some international oil coin. US dollars. Stick with me because the answer to that question unlocks something huge about how money and power actually works on this planet. So, here's the thing that actually blew my mind. I first really thought about this. See, Japan, the land of yen, right, buys oil from Saudi Arabia in dollars. India, with a billion plus people and rupee, buys oil from Gulf in dollars. Brazil, Portuguese speaking, own currency, other side of the planet, also buying oil, also in dollars. See, America isn't even in most of these transactions. No American company, no American port, no American tanker, and yet dollars. But why? Right? This is not an accident, this is a design, and that design has a name called Petrodollars. Let's unpack this, right? So, before you get to the Saudi deserts and Nixon's press conference, let's understand some basic concepts, right? What actually makes a currency powerful, right? For that, let's take an example, right? Imagine a tiny village. They print their own money. Let's call it Villago, and it works. Why? Because everyone in this village accepts it. The baker takes Villagos, the carpenter does too, right? Why? Because trust is the foundation, right? Write this down or maybe screenshot this, whatever you do. Currencies get their value partly from demand. The more people need your currency to do business, the more valuable and important it becomes. It's simple, it's elegant, and it is powerful. So, the question becomes, what creates global demand for the dollar? So, right, and that's exactly where the story is going, right? So, most videos tend to uh, jump straight to Saudi Arabia in 1974, but we are not going to do that because to understand what actually petrodollars are and why they matter, you actually have to understand what happened and existed before them, right? So after World War II, the world needed a financial stability, right? So in 1944, the major powers met in a tiny ski resort town in New Hampshire called Bretton Woods, right? And they built a new system of global finance, right? How it worked was simple. They took gold as an anchor. The US dollar was pegged to that dollar, which was around $35 for 1 ounce of gold. And every other major currencies was pegged to the dollar. So basically, the was gold basically backed the dollar and dollar basically anchored the gold. It was very clean, it was stable, and for a while it worked beautifully, right? But the problem actually came in when uh, the spending of US actually increased a lot during the Vietnam War, right? Parallelly, a lot of social programs were running in their country, and what happened, like more and more dollars are actually flowing overseas, right? And other countries basically started to look at their dollar reserves and think like, is there actual gold enough within the American walls maybe to get back for that, right? And what France did, France actually started demanding their gold in exchange for their dollars, right? And then on August 15, 1971, President Nixon goes to TV and drops the bomb. We are suspending the convertibility of dollar to gold, and the Bretton Woods system was dead. And now the world was staring at this big pile of paper, what they call dollars, and there was a question in their mind: if they are not backed by gold anymore, why exactly should we want or keep them, right? And this is where oil walks in the room, right? Now, why was oil the perfect replacement for gold, right? And there's one word behind that reason. The reason is non optional. See, you could choose not to buy gold, you could decide jewelry isn't your thing, but oil, try telling the population they can't heat their homes in this winter. Try telling the airline industry they have no fuel today. Try telling the car manufacturer that the assembly lines would eventually stop. In the 20th century, and honestly still today, oil was basically the lifeblood of civilizations. Cars, planets, factories, ships, plastics, chemicals, everything was based on oil, right? And this was not really a luxurious commodity. This was basically the oxygen for the global economy. And what happened next basically changed everything, right? So what happened was that the major oil exporters began pricing oil in US dollars, right? That's it. That was the mechanism. But why, right? The real question is, why would Saudi Arabia agree to do something like that? So, to understand that, let's put ourselves in Saudi Arabia's shoes. Imagine you are Saudi Arabia in the 1970s, right? Oil prices are rising. You are selling enormous amounts of oil to the world. Every year, billions and billions of dollars are flowing into your economy. Now you have a problem. What do you do with all that money? You can't keep hundreds of billions sitting as cash because inflation would eventually destroy the value, right? So you need safety, right? You need investment opportunities, and most importantly, you are sitting in a geopolitical location in which you are in a danger, right? So you need security. So in the same time, in the 1970s, in the early 1970s, America was struggling with the Bretton Woods, with the fall of Bretton Woods agreement, right? So America needed a new reason for the world to keep demanding the dollars. So what did America do? They say they went to Saudi Arabia and they said, if oil is purchased in dollars, we will provide you with the military protection, partnerships, access to our financial market, right, which is one of the safest investment asset in the world, like the US treasury bonds, right? So understanding from the Saudi Arabia's perspective, this was very attractive, right? The country gains security in a very volatile region, right? It gains access to a deep financial markets where billions can be invested, plus given the gain in liquidity as well, right? So there they could basically move enormous amount of cash very efficiently, right? So basically what happened is that it was made sure that the global buyers need dollars, right? So if you need oil, oil is priced in dollars only, so you would eventually need dollars first. So India, Japan, Germany, everything, whatever is happening in any other countries all around the world, if they need dollars, if they need oil from the from south Saudi, they would basically need dollars. So oil demands became dollar demand, indirectly, automatically, and globally. The world needed oil. Oil needed dollars because they wanted a safe haven. So this is basically why the world needed dollars. So gold didn't anchor the dollar anymore. Oil was the next thing, right? So basically, uh, let's talk about the global oil imports, right? Roughly $2 trillion per year, right? It is a simplified figure, but every year countries around the world need to come up with $2 trillion just to keep their energy systems running. They don't need $2 trillion to invest, not to save, but to buy fuel, right? And this particular thing is basically creating a constant structural unavoidable demand for the dollar every year automatically, right? So also, if we look at the central bank reserves, right, the central bank reserves, the saving accounts of countries historically has been around 58 to 60% of the global foreign exchange reserves, right? Why? Because you need dollars to buy oil. You might need them in a short period notice. Let's say at 3 a.m. you need oil, right? So you don't want to hold euros just so that you have. So if you need them in urgency at 3 a.m., you first have to make sure you exchange them to dollars. Then you can buy oil, right? So this is how Petrodollars created a built-in system-wide demand for the dollars at the central level, and this was actually extraordinary, right? So let's talk about petrodollar recycling. So oil exports like Saudi Arabia, UAE, Kuwait, and others were selling billions of barrels of oil, right? They were receiving oceans of dollars. So what now? You just can't let all that cash sit in a vault, right? Because inflation, you need to actually put it somewhere, right? And historically, a huge portion, right, flowed right back into the assets which were traditionally US dominated, like the US Treasury bonds, right? Maybe American stocks, maybe real estate, which are basically dollar, not actually, but majority went to the dollar based financial instrument, right? Oil gets sold for dollars, dollars get invested back into American markets, right? American markets stay deep and liquid and attractive, right? Which eventually makes everyone want more dollars, right? Which made the dollar oil pricing stable. So basically, oil was sold, dollars were earned, petrodollar revenue, right? This excess, the surplus, went back to US back securities, right? So it is basically a recycling law, right? So this is an example for you to understand it more efficiently. Let's say an oil exporting country brings in 500 billion in a given year. What happens to that money? Historically, what happens? Approximately 60% went straight to the US Treasury. 20% went to the global stocks, which was ultimately backed by US dollar, right? And the remaining 20% basically went to other assets like maybe infrastructure, maybe sovereign funds, etc., etc., right? So just imagine this 500 billion, this is a one time figure, right? Imagine this across all major oil exporters. This was one country, all major oil exporters, year after years and decade after decades, right? So oil dollars flowed back into the financial system and they were supporting asset prices, and that basically happened for decades. So petrodollar recycling basically linked energy wealth directly to the global capital market, right? So if we look at the micro level, which is basically you and me, every time you fill up your tank, you are at the tail end of the global dominated supply chain. You actually feel the price, right? You do. You almost never see the currency machinery which is running underneath it, right? Zooming out to the meso level, which are basically businesses, oil companies, airline, shipping firms, chemical manufacturers. They are hedging oil prices in dollars, writing contract in dollars. They're managing supply chain priced in dollars, and that is happening every single day. Zooming more out to the macro level, talk about governments and central banks. They are basically holding dollar reserves, right? They are managing trade balances which are dominated in essentially dollars, and they are settling monetary policies partly in response to the dollar oil price, because they need it in terms of contingencies, right? So let's look at China for a while, right? See, China is the world's largest importer of energy, right? We are talking about hundreds of billions of dollars in oil and gas every single year, which is enormous number. Now here's the interesting tension. See, China has won, right? and they spent years trying to internationalize it. They are trying to make it a global currency, right? They want to trade in yuan, but the problem is when they need to buy oil in the global market, they are dependent on dollars, because basically that's how the market is priced. They are priced in dollars and not yuan. Saudi Arabia is essentially accepting only and only dollars. So this scenario is creating a structured situation where even China, which is the second largest economy on the earth, has to maintain a significant dollar reserve and suffer in a dollar dominated trading relationship, right? Just to keep the lights on, right? So energy consumption and currency demand are getting wired so deeply together. The more energy a country needs, the more deeply it's plugged into the dollar system, right? Now let's come to a very interesting example. We'll talk about Norway, right? So what happened was Norway discovered North Sea oil in the 1960s, right? And what they could have done is they could have spent all the money, all the gains that they could have, but Norway got such discipline in this particular manner. What they did, they created government pension fund global, which is also called oil fund, right? So they took all their oil revenue, right? They strip out everything that they wanted to spend or develop or anything, right? And whatever the surplus was, they basically made a globally diversified portfolio consisting of stocks, bond, real estate, everything across the world. And today, Norway's fund is the largest sovereign wealth fund on the planet, over $1 trillion. And guess what the population of the country is? 5 million people. On paper, in a sense, Norwegian citizens are basically millionaires, which are backed by oil revenues, which were wisely recycled into investing in global assets, right? This is basically petrodollar recycling, and it was done beautifully, right? The problem was Norway knew it was a finite natural resource, right? So rather than spending it all together, they converted it into a permanent financial wealth. Norway, literally, you can say, Norway wrote the playbook, and just everyone is now trying to cope up with the gains, right? Now, see, you will see people online claim that the petrodollars are the reason dollar is the king, right? Now, they think that without the oil deal, dollar would collapse overnight, right? But I think that this is one big conspiracy which is held together, and it's too simple, right? See, when we're talking about dollars, it's not dependent just on petrodollars. It is actually, its power rests on five pillars. Let's first talk about the treasury market, right? The US treasury market, it is basically one of the deepest and the most liquid bond market on the earth, right? Whenever anything scary happens globally, investors first reaction is to flee to the dollars or the treasury and never away from them, right? And second pillar is the trade invoicing. See, massive amounts of global trade, not just oil. There are other prices which are settled in dollars, which are maybe electronics, agriculture, metals. There are a lot of things, right? The third thing would be US financial markets as well. See, US financial market is the biggest stock market, the derivative market, and biggest banking systems in the world, and they all are operating in dollars. Then comes the fourth, which is petrodollar system. It matters enormously. See, I'll be honest, right? But it is one of the five pillars, right? Then comes the reserve status. See, it is basically the central bank preferences. So it comes with the decades of inertia, institutional trust, and the network effects that basically keeps the central banks holding the dollar. So petrodollars are no doubt crucial, but they are one pillar in a very sturdy building, and don't let anyone tell you it's only one, right? So I'll come in with a balanced perspective for this, right? Petrodollars do matter. They create a powerful self-reinforcing mechanism linked to energy demand to dollar demand. But they're one part of a much larger ecosystem. The dollar's enduring strength comes from the combination of deep financial markets, network effects in trade, geopolitical powers, and yes, the petrodollar agreement. There is no single factor which tells the entire story. The nuanced truth is always more interesting than the simple story. Anyone selling you a single cause explanation for the dollar dominance is probably just trying to sell you something, maybe gold or crypto, anything, right? The real world is complex, and complexity is where the things actually become interesting, right? So always remember that, right? So just to tie it all together, we'll try to summarize the video in one slide. Why does India buy Saudi oil using dollars? Let's walk through the chain reaction. See, oil is priced in dollars. That's the convention, the standard, the rule of the game, right? You can't change it. Every country that needs oil have to have dollars, right? Which is basically creating dollar demand, and dollar demand is increasing, which basically keeps and makes the country hold dollar reserves, buy dollar assets, recycle petrodollars back into the US financial market, right? So this is a petrodollar system in four steps, right? So decade of global finance compressed into a chain of simple logic, right? So what I believe, that petrodollars aren't really a story about oil, right? They're actually a story about demand. See, oil gave the world a reason, which was a very powerful and a non-negotiable based on every single day, to hold US dollar, which was oil, right? And when you create that kind of structural demand and dependency for a country at a global scale, you actually reshape finance, geopolitics, and the power itself, right? You're actually doing that. A barrel of crude oil sitting in Saudi oil field become connected to US treasury rate, right? How complex is this? To central bank reserves in maybe Tokyo and Mumbai, right? It is affecting the mortgage rates. It is basically a global capital flow, right? Energy has actually moved the world. Petrodollars move the financial system, right? Now I'll like to walk through some mathematical modules, right? So this is for the math nerds in the audience. A quantitative backbone. See, we'll talk about trade demand module. So the dollar demand from the trade is basically a sum of all import values dominated in USD. A simple summation, right? The larger the number, the bigger your dollar invoice import bill. The more dollar reserves you need to hold, the more dollar credit lines you maintain. And you are actually so deeply wired into the dollar system. See, China's number is massive. India is growing fast. And that's why both countries have complex relationship with dollar dependency, even as they try to build alternatives. Alright. Now, the reserve ratio is one of the most watched numbers in international finance, right? You take a country's dollar holdings, you divide them by the total foreign exchange, right? And that percentage basically tells you how dependent they are on the dollar system. The global average is sitting around 55 to 65% in the emerging markets, right? Even after decades of diversification efforts, right? But why so high? See, partly dollars, partly trade invoicing, partly inertia, partly the simple reality that you need to buy oil at emergency at 3 a.m. You want dollars in hand, not euros that you have to convert first. It's as simple as that. It's just pure convenience. The recycling module is where the math is actually getting elegant. You take total oil export revenue, right? You subtract what country actually spends at home, domestic consumption, right? The government spending, imports, local consumption, right? So what's left is investable capital, and historically that surplus, often hundreds of billions of dollars per year across major oil exports, flows back into dollar dominated assets, which are treasuries, equities, real estate. The formula is simple, the consequences are enormous, right? This feedback loops kept the US interest rate very suppressed for decades, and that actually helped the Americas deficit to be constantly funded, right? So take a sovereign wealth fund into picture, right? Let's say it is worth $1 trillion, right? It's not unrealistic, Norway is there, and we have several Gulf funds which are actually close to that number, right? So if they allocate 40% of that dollar asset, which is basically $400 billion, which is directly flowing into the American markets, and that is from just one fund. Now multiply that across all major petrodollar funds, across all the central banks holding the dollar reserves, right? So this is the petrodollar recycling at scale. This is why US treasuries have a global buyer for around 50 years now. This is why America deficits haven't triggered any kind of currency crisis, right? That could have devastated developing countries. The barrel of oil and the bond market turned out to be very close friends, right? So this is essentially the wrap on the petrodollar system. If you like this video, and if this video actually helped you see global finance differently, that's the whole goal here, to be honest. Like it, share it, and subscribe it for more, and I'll see you next time. Thank you.